But I was just to see Ray Dalio come in and saying that he owns Bitcoin and talking favorably about, to the point, I think it was Ray Dalio, right? Daniel, that said, I'd rather own Bitcoin than bonds.
Yeah, and that was by far the biggest takeaway for me with all the volatility and drama and stuff. We joked about, hey, somebody's going to make a major announcement. I don't want to go as far and say if Bridgewater, the hedge fund that he runs and started or has a major role in, actually bought it. I don't believe so yet, but he personally owns Bitcoin, which is a huge tip of the cap. I know everybody is caught up in Elon Musk tweets and Michael Saylor, and now they're talking with Bitcoin miners and kind of staving off. You got to give them credit because Bitcoin is starting to play the political game of, you have to try to look forward and do some PR, some press control. So Elon Musk thinks he's the crypto god, self-anointed. Everybody has to have a huge ego in this business. So you want to go out there and say, hey, this is bad for the environment, because you've got to cover your butt on what a waste your Teslas are for the environment. And now Bitcoin and the miners, they get with two huge CEOs, Michael Saylor, MicroStrategy, and Elon Musk, and they start talking about, hey, we're going to be good for the environment. We're going to transition our power usage and all that. It's all BS in the big picture. So this is the perfect opportunity to use these headlines, if you're a believer in cryptocurrencies, to add to those positions or at least initiate those positions, because governments can ruin cryptocurrency, but it'll be through taxes, and it'll be through conducting the argument in a way where it's harmful for you as an individual, and just like every other excuse they make, it's going to be better for you and better for society if they implement these rules. That's how they're going to do it, and they'll tax it out, not just shutting it down, although that is a risk with environmentalists.
Yeah, and guys, it wasn't the news out of China that crashed the markets. I mean, that's what was being reported. Listen, China banned crypto exchanges, alternative trading platforms in 2017. They came out, they put in more stringent rules in place 2019. And then, what was it, like a month or two ago, they said they're going to have their own digital currency. So, it's in their best interest to make sure that nobody else could do anything with digital security or currency in the entire market, right? So there's no surprise there, but yet, people saying, well, China news is terrible. Bitcoin, no one that owns Bitcoin is thought that China was going to be a huge growth engine for this. No, it's more about institutions here getting in. And it wasn't Elon Musk saying, oh, green energy, which, again, it's flip-flopping back and forth. And the fact that guy could send a tweet and move hundreds of billions of dollars in and out of a market and nobody says anything or is amazing to me. The reason is there's a ton of freaking leverage in this industry. There's a lot of kids that are leveraged 100 to 1, even more.
Yep.
And you just need a little bit of a decline, and that's what happened, because these people HODL, right? Hold on for dear life. Hold on. We're never. How many people have I talked to? Have you talked? I'm holding on to this for dear, never ever selling. Someone freaking sold. Yeah. You're talking about $1 trillion in market cap. $1 trillion in market cap wiped out in weeks. Somebody was selling. And a lot of that is leverage, and it's a good thing when you see some of the leverage comes out, because a lot of these guys are going to tighten up their policies, even when they're offering just high interest on holding some of these tokens, which is, the new craze out there that everybody's doing. And they're going to dial back. It's going to be more regulation, the good type of regulation where, you have to pay taxes on your gains and stuff like that. That's going to be good, because that's going to allow this to scale, where I got to tell you, Daniel, in this industry, you're looking at Coinbase, right? Coinbase came out, and now Coinbase said they're going to trade, Dogecoin's going to be on that platform. But there's at least, if there's like 60, 70, I don't know how many there are right now, 70, whatever there is, that are trading on Coinbase, I can't find information on probably 70% of those. I don't know what the coin represents. I don't know. You won't even find the management team. You might find a LinkedIn with a couple of names on it. You don't know how many tokens, they say how many tokens are outstanding. You really don't know, though. You don't know anything, right? You don't know the cash balance. You don't know the business model. You're not getting equity. They don't have to report anything. But Coinbase is under the SEC now. It's a publicly traded company. Yep. So something's got to break there. They either have to come out with more regulation and say, hey, we need companies. That's one of the reasons why with our CEO token, guys, we're getting our financials audited. This way we have transparency, and it's going to result in, if our company does well, which you're doing well now and growing, that we will get institutions to invest. That's how I'm looking at it right now. So we're going through that process. Should be done in a couple of weeks. It was a very long process and hard. It's our first time we're doing it. But, that's going to provide transparency. But you need that transparency. I'm just surprised that, Coinbase is able to trade some of these. Who do we have? Elon Musk. All right. Basically saying this is a scam or a fake. You have Mark Cuban saying it's a scam or a fake. You have all these people coming out basically a scam or a fake, and now all these platforms are trading this fake bullshit security on their platforms, which is kind of crazy when you think about it, right? I mean, imagine doing that.
Oh, it's absolutely. Yeah, I mean, it's crazy. I totally get your point. There will be more regulation, no doubt. Goldman Sachs had a good report. They were interviewing somebody that used to work with John Clayton when he was over the SEC. I don't have his name right in front of me, but no doubt there'll be more regulation of some sort with all this. How they get around it right now, I don't know, but I'm going to suspect, and this is a guess. Listen, everybody knows what Dogecoin is. If you're buying Dogecoin because you think it's fundamental or you want to look into any business aspect, if there is one, or any detail, you're not paying attention, and really there's no way that that's the market for that. So maybe they get around it because there's enough information publicly to point to know what it is. And then the also thing is hey, even if you know cigarettes are bad for you, you can sell them. So people like to gamble. People like to speculate. It's another form of Vegas in that sense. So that doesn't bother me near as much as it bothers you. But it is a good question from the SEC. I don't know what their feeling is on that, but no doubt they will put their hand in the cookie jar and make some new rules going forward that all of us have to abide by.
Yeah, no, I agree, but we need more regulation, we need more transparency. That's how you're really, really going to scale this thing. But the reason why it came down is there's a lot of leverage that came out of the market, guys. It wasn't because of China. I mean, nobody had China as a catalyst for Bitcoin going to 100,000 or whatever. But we'll see how this plays out. Less leverage in the market's usually good, and we'll see how it builds back up. But we did see for me, I think it's a positive sign when you're seeing Ray Dalio come in and say, "Hey, I bought." Yeah,
I don't know how you wouldn't. How you can take that anything. Granted, he's a multi-billionaire, so even if he put $1 billion in it and lost it, he wouldn't be hurting. However, it's a tip of the cap. He's one of the smartest, best thinkers because he's willing to change his mind. He has changed his mind when the facts change. From an investing standpoint, if you think Bitcoin's going away, fine. You're not going to pay attention. I'm not going to convince you, and I'm not intended to convince you of anything. If you don't think it's going away, though, here's how you play it. When you see massive volatility like this, you want to look at, and just like Frank brought up, Coinbase. Coinbase should be reaping the benefits from all the trading activity and volumes going on because they charge fees, they can charge services for different things, they list new coins. That'll gain more users and more attention. The other side to that is they're not the only game in town. Galaxy Digital should be reaping the rewards right now. When prices fall, their private asset management can take deals, invest in new startups, invest in new cryptocurrencies, get coins, et cetera, et cetera. Think private equity, think Wall Street, just in crypto. They also do trading. This is from Cointelegraph, good website that we constantly check. Voyager Digital, the Canadian trading and yield app. So like you talked about, Frank, no doubt they help fuel the leverage in this because they offer yields and different things on tokens. But during the crazy, they just reported, so they haven't even really benefited a whole lot from this, just in general. I'm talking about the recent volatility. Their third quarter results jumped 16x. Revenue went to $60 million from $3.5 million, Frank. Now, that is because more people have interest, more people are doing it. But my point is that when you see huge volume, you want to look at who's benefiting from that. And yes, Galaxy Digital price has fallen, Voyager Digital has fallen, Coinbase has fallen. But if you're just looking at the present price, then you're not investing. You're just emotional, you're like a wave out in the ocean. So think of who's going to benefit from the volatility. It should be the three we just talked about. And if you're not, if you have positions, either add to them or look to hold them, but know why you own it and know who would benefit from the environment that we're experiencing.
No, that's well said. That's well said. And I'm actually pulling up something, so I'll explain it since if you're watching this through YouTube, you'll see it. If not, I'll explain it. But if you go to CoinMarketCap, Daniel, and you look at it's really cool. It gives you, just all the tokens and market cap, circulating supply and stuff. But at the top of the page, and I'm going to show that now on our YouTube page, they have the 24-hour volume of all of cryptos, right? So right now the entire market cap's 1.7 trillion, and it was 1.5. It came back to 1.7 trillion. It was 2.5 before the crash, but the volume right now, 24 hours, is about 170. But if you look at the volume and just take the last 3 months, right? So if you look at the volume of all cryptocurrencies, it's right at the top. If you click it, you see like 130, 150, it hit at 200 a few times, and then April, and then all of a sudden when you look at May, it's 200, 250, 260, 300, hit 400 one day. This is $400 billion in total trading volume in a 24-hour period, right? And it's almost constant where it's, here's another $400 day, which was Thursday, this is May 20th, right? So May 19th, $400 billion, right? So this is the volume. This is a trading back and forth. And almost every single day after that is over $200 billion in volume. What does that mean? It means that these companies, all the ones that you just mentioned, they make more money the more people trade. And you're seeing more volume. So these guys are going to see their earnings skyrocket next quarter. And people look at it and say, well, Bitcoin's down. You're still seeing a ton of people trade this market, buying and selling. That's why Goldman Sachs recommended it. We're up a ton on it. It's volatility and liquidity. If you have those two things, the investment banks, especially when you look at Morgan Stanley, Goldman Sachs especially, are going to benefit from it. That's why they're blowing out the earnings by like whatever. I think if they're supposed to report $5, it was like $12 or something, whatever it was for the quarter, record, because you're seeing more money being injected to the system constantly. More people have more money than ever, and you're seeing more and more and more trading. That's good for you. That's why Coinbase was over. I forgot. Did Coinbase touch 400? I know it was over 300.
I don't know. Yeah, when it IPO'd, I'm not sure. I know it was over 3.
And then it came back down, and then now it went down to like 210 or something like that. And then Goldman came out. Remember, they came out a month ago, and after a month, all these investment firms that were part of that offering are going to come out and research on it, and they're going to have to put a buy rating on it because the thing is down so much, right? A lot of their clients are in it, and we saw Goldman Sachs come out and say, "Hey, it's worth over $300." And that was the first one. You're going to see like 3 or 4 more positive reports come out. Listen, that's what moves markets. I'm just telling you how the markets work. They're going to come out and say, this is a buy and have a 350 target price. Well, it's at 220, but it's starting to move back up now because you're seeing Bitcoin kind of leveling out here. You're seeing buying coming in at 35,000 levels at 40,000. I don't know where it's going lower or higher, but what I do know is you're still seeing massive amount of trading, and a lot of that trading takes place on Coinbase. They're still, one of the biggest next to Binance. And those earnings are going to explode. They blew out the numbers last time, and they reported them ahead of time, which was smart before before they went public, which I love that they did that. These numbers are going to be better than those numbers, and those numbers blew them out. So it will be interesting, Daniel. But yeah, it's a good point that you brought up.